the next innovation of helicopters. Here you have these vehicles that are safer because you can scale down electric motors very efficiently and put on multiple rotors, so you don't have any single points of failure on these vehicles like a helicopter.
First ever commercially viable electric vertical takeoff and landing aircraft, Archer, who fixing traffic and fully renewable transportation solution, designing, manufacturing, and operating advanced electric aircraft, is merging with Atlas Crest Investment Corporation with valuation of $2.7 billion, representing 1.2 multiple of its 2026 revenue and 4.2 multiple of its 2026 EBITDA. That said, Archer seems to be an exciting investment, also being a disruptive on-air mobility which takes off vertically like a helicopter, flying forward like an airplane, and will be a 100% electric. Makes it a good investment in the future is on its cost standpoint among its customers, because it is more affordable at 3.3 per miles comparable to UberX, while traveling 10 times faster than a car. With that, using Archer as your mode of transportation traveling from Manhattan to JFK will only cost you $50, while riding a helicopter is $1,775. Imagine that! Archer is cheaper than Uberpool and UberX actually. So with this company, it is in position to disrupt the ride-sharing economy, right? While speaking of disruption, guys, Cathy Wood of ARX Invest would most likely jump to this stock as she loves innovative and disruptive companies. We saw a lot of stocks flying because of her attention to that stock, right? Just like Tesla. So that said, ACIC is disrupting the helicopter and ride-sharing economy business, which makes this company unattractive to invest in my own point of view. This company is at infancy, which can make or break your heart, as success is not 100% feasible yet, as they had said that their undertaking will require a tremendous amount of effort and it will take decades for them to have a profound impact on the world. For an entrepreneur, this one is of those hard world problems: high capital cost, advanced soft hardware technologies, long timeline, and an overall very challenging business with low chances of success. Therefore, if you choose to invest in this company, you probably would experience a number of turbulence on your investment, a possible crash to ground zero, or maybe losing more than 50% from your market value on every bad news the company may have, like car crash or unsuccessful flight. However, one good thesis to embark on this investment is their affiliation to United Airlines, as one of their PIPE investors in their $600 million private placement, which actually includes Stellantis, investment banker Ken Moeles, who is the sponsor of this SPAC, and Mubadala Capital, an investment arm of Abu Dhabi state investor Mubadala Investment Company. Knowing that one of the biggest airlines of the world had invested to Archer, it means that this company has something to give. In fact, United Airlines had an order amounting $1 billion with an option for additional $500 million of aircraft. Meanwhile, Stellantis is their automotive OEM partner, which support Archer on composite materials, NVH design, and access to Stellantis supply chain with focus on reducing component cost with immediate focus on battery materials. However, you need to know that holding long-term is the best way to earn more money on your stock investments, particularly with this kind of company, a disruptive company. I had invested for this company for 100 shares, but I do look forward to add more once it dips, subject to capital availability. So probably my capital for additional investment will be coming from covered calls on the stock or from my another position. In my point of view, investing to Archer actually as early as today to a price below $20 or even $30 is like investing to Tesla's IPO at $17 before, where doubters and bashers about the success of electric vehicle were left and right. But guys, look, where are they now? As Tesla reached to $800 post to 5-1 split. Maybe same fate could happen to Archer in 3 to 6 years as it will ramp up its manufacturing, delivering aircraft and launching aerial ride-sharing business in US cities, having free cash flow to break even in Q4 of 2025. That is huge, just only 4 years, right? Meanwhile, scaling globally by 2027 to 2030. Achieving this milestone could mean a higher stock price, knowing that Archer business model is designed to take advantage on total addressable market of $1.5 trillion with upside potential to $3 trillion, as they have two unique revenue streams in Archer's direct aircraft OEM and aerial ride-sharing business, to which this company positioned itself being the only VTOL company in the world with a contract from a major airline to help finance and accelerate its expansion into urban air mobility. So, with that being said, guys, should you buy ACIC or wait on its dip? Opinion to this stock is neutral, although I already own 100 shares of this one, as I said earlier. But buying this stock now won't hurt your portfolio either, as long as you can able to hold it long term and can stomach into upcoming turbulence. I personally believe that having at least a little amount of shares of this stock would mean a lot in the future. But it comes with higher risk. But always remember, the higher the risk, the higher the return. Okay? So the risk in here is not able to fly its business. Therefore, just invest the amount of money you can afford to lose. Personally, I have planned to sell some shares if this share would go up to $50 to $80 because of hype. Because for sure, just like other SPAC, the stock will decline. The stock will dip. Okay? And we'll just add more on its dip. Palantir sinks by 12.75% after its earnings report, down from $31.91 to $27.84 after its very good earning, where it had reported a revenue growth of 47% in 2020, while having a revenue expectation growth of 45% for the first quarter of 2021. So, is Palantir still a buy or worthy to hold with this level of volatility? Actually, guys, in my own opinion, Palantir is still a buy and one of the best stocks to hold long term, as I believe that this one is a $100 stock or more in a year or two, especially now that they had a partnership with IBM and win a lot of contracts last Q4 of 2020. In fact, ARK Invest bought 1,560,200 shares in this dip on February 16, 2021. So I still own Palantir, which I have gained 157% since its IPO. I'm also looking forward to add more once I have capital. So I still have a lot of planning, right? So let's see which one will be prioritized. So furthermore as well, Atos dips today, which gives me the chance to buy another 80 shares purchased at market. Remember, market, I don't have a limit to this stock after I added shares, because this is the signal that I'm a bull to one company or to a particular stock. I purchased at a market cost of 3.5494. which the stock's chart looks actually solid to me, which implies that the new bottom is $3.46 to $3.5. Like I said on my previous video, I'll be holding this stock further and look forward to add some once I had cash from its covered calls. That's all for today, guys. So if you like this video, please give me this like button, not this. So if you're new to this channel as well, click that subscribe button and don't forget your notification bell so you will be keep updated on my upcoming videos. Please remember that I'm dropping a video once or twice a week.